I spoke with Beasley's head of U.S. Cyber, Melissa Carmichael, about the mounting pressures shaping the cyber insurance market this year. This includes low pricing, rising ransomware severity, and the growing influence of AI. Melissa discussed AI's dual role, empowering attackers while also strengthening defensive capabilities, and emerging risks tied to data centers and board-level accountability. Check out what she had to say. Hi, Melissa. It's great to be speaking with you today. How are you doing?
I'm doing well, Elizabeth. Thank you. It's nice to be here.
Yeah, it's really nice to have you. I'm looking forward to this conversation. I know you have a lot of expertise in this area, and Beasley, at the beginning of the year, put out their predictions for 2026. So I'm excited to dive into some of these. And I guess just to start off, sort of a big picture question, but from your vantage point at Beasley, how is some of the low pricing in the cyber market starting to test profitability? And what else do you expect to see this year in cyber insurance?
Yeah, no, it's a great question. And I think one that we've been talking a lot about throughout 2025. But the market is definitely challenging, to say the least. And we're certainly seeing that ransomware is not going away. These events are also increasingly severe, as we saw with the cyber attack on Jaguar Land Rover last summer, which led to a 0.2% reduction in the UK's GDP in September. And, despite this backdrop of increased claims and severity, we remain fully committed to cyber. But where conditions are unsustainable in terms of pricing, as we're seeing in the US, we're holding firm on rates rather than really chasing the market down. And striking a balance to find the right market pricing stability is really important and can be a challenge. The way we've been approaching it at Beasley is really focusing on broadening our coverage to support our insured's needs. But obviously, broadening the coverage also comes with more claims activity. So we just need to make sure that we're, adequately pricing that exposure to support a long-term sustainable market. And, we continue to fine-tune our pricing, not only to take into account the long-term trends in cyber, but also the risk characteristics and the claims. And having been a market leader for the last 20 years in cyber, we have plenty of data around claims that really help shape our thinking around, what does adequate pricing mean in this market?
Yeah, that's great. And obviously, you've been doing this for a long time. You have a lot of expertise in cyber insurance, and data is so important. And another part of the conversation we've been hearing more and more is artificial intelligence. And I've been hearing about AI-related exclusions being added to cyber policies as well. So I was curious what your perspective is on that, and how should insurers be sort of striking a balance between managing some of the uncertainty with AI risk and still providing, meaningful cyber coverage?
Yeah, no, it's a great question, and top of mind, I think, for many of us, not just those of us in the cyber industry, but we're continuing to watch the developments very closely and in real time. We're seeing both state and local governments becoming more active in taking on privacy and AI issues. State AGs recently indicating that they're going to be targeting AI chatbots in 2026. We're also seeing a number of intellectual property issues around copyright, defamation. Beasley's approach to date is really more focused around affirming coverage and not actually excluding coverage. We prefer to underwrite to the risk and understand the exposure. With that said, that could mean that some risks are more difficult to insure until better guardrails are in place around the use of AI tools. But it's definitely an area we are continuing to watch very closely.
You've been watching a sneak peek of the Insuring Cyber podcast. Click on the link in the description to listen to the full episode.